What's going on, everybody? Welcome back to my YouTube channel. Now, on today's lesson, I want to share with you probably one of the most powerful tips that I can give you as a Forex trader. Now, this is something that I've personally been using for many years now, and something that I apply to near enough every single one of the concepts that I trade in the market. Now, I don't have a strategy per se. I trade based on principles. So what happens in the market every single day? And that's mainly from trading candle formations as opposed to trading the overall structure of the market. So I look for the behavior from a higher time frame perspective, and then I use scaling down techniques to take advantage of that intraday move once I've identified the behavior. So in today's lesson, I want to share with you how you can read the markets like a true professional, if that even exists, but just really understanding currency strength and weakness. I'm going to share with you two examples using two correlating pairs on two occasions. So technically it'll be four examples, but you'll really see how to put this together. And this works on all Forex pairs, but you just have to make sure you're using the right currency at the right time. So let's dive straight in and take a look at this. We're looking at the USD CAD here, and we're looking at Aussie dollar USD. What I'm looking for here is a behavioral shift. So most people, when they're looking at behavior in the market, they'll look at the overall trend of the market. So you can see here to the left, USD CAD is pushing bullish and Aussie dollar USD is pushing bearish. Now, when I'm trading, the overall structure of the market is not as important as the behavior of single candles or multiple candles, simply because I'm in the market for an hour to 2 hours per day. And if I'm trading two sessions, then it could be up to 4 hours at max, but they're divided from the London session and the New York session. But let's say I'm looking at this, right? This would be classified as a two candle theory trade. If I can see here that the previous candle has closed bullish and the previous candle here is closed bearish, the overall structure of the market is weighted to the upside and the overall structure of the market is weighted to the downside. The first thing that I'm going to conclude is that because we have the dollar as the base currency here, and we have the dollar here as the currency pair, which is to the right, meaning that the market will go down, and the currency pair here to the left, which means the market would go up, that the dollar is strong. When I see this information, I know in the back of my mind that based on the concept of two candle theory, there's a much higher chance after a candle closed bullish and a candle closed bearish that the next candle will be bearish and or bullish in this instance. Now, you don't need to take my word for it. You can go and look at this yourself. You see here, this candle closed bullish, next candle was bullish, this candle was bearish, next candle was bearish. It's a confluence and it happens all the time in the market. Not 100% guaranteed, but it happens more often than not. So with that being said, I'm aware that the dollar is strong. Now, that being said, I want to see confluence of that USD strength. So when I'm looking at USD CAD, for instance, and I want to take a buy based on the fact that I believe the market's going to continue bullish, what I want to be seeing is that same confluence lining up with Aussie dollar USD. So let's say now this is where I want to enter my trade, and this is the current market. Okay, this is not replay mode. This is the current market. I want to see USD CAD going bullish, and I want to buy USD CAD. What I'm going to do to add confluence to the idea that USD is strong, I want to see the exact same behavior developing on Aussie dollar USD, meaning that if this goes bullish, this must go bearish. Now, I know that there's a very high chance that this candle could close bullish to the left and bearish to the right, and I want to take advantage of that short-term movement. So what I can do is I can scale down to the 5-minute time frame on Aussie dollar USD and scale down to the 5-minute time frame on USD CAD. Now, when I'm looking at this, I can see the overall structure is bullish. We're making higher highs, higher lows. And if we make a higher low, there's a very high chance that we continue bullish. And the same here. We're making lower lows, lower highs. We even have a further confluence here on Aussie dollar USD. Price creating a double top, which is a pattern. It's just another confluence, but it's a pattern. Now, if you see the candle close here at 8.55, you can see that this candle has closed bullish. Okay, so this is illustrating to us at this moment in time that there is a short-term behavioral shift favoring the dollar bullish. Now I have my other confluences. The structure is bullish. The sentiment in terms of the market is bullish because we can see the higher time frame. We can see the 5-minute time frame. And if I look over here at the same time, we can see that the market is currently bullish. Now, what we don't want is for the market to be bullish short-term on Aussie dollar USD. We want to see the market shifting to being bearish short-term. So what I would do in an instance like this, let's say now I am planning to trade either one of the pairs. I can see that there is a leading currency strength with the dollar. Now, we don't have that leading currency strength with Aussie dollar USD, but usually what will happen is you'll have one currency pair with the dollar that will lead first, and then you'll have a follow through with the opposite pair, in this case, Aussie dollar USD. Now, I will say to myself, well, I'm looking for sales because the previous candle closed bearish. I can see there's a structure in the market where price is failing to break above. We have a double top pattern. We can see that price is reacting to this level. And what I can see here as a leading currency strength is that the dollar is showing signs of strength because we have a bullish close. The next candle opens, we create a bottom wick, which is the formation of a candle development, and we're continuing to push bullish. That will then give me confidence that I'm on the right side of understanding the market's behavior at this moment in time, which is USD strength. Plus, we have favorable structure. Plus, we have price failing to break above the structure. And what I can do in an instance like this, because I have a leading currency strength short term, illustrating that the dollar is going to be strong, what I can do here is take the trade with confidence, knowing that there's a very high chance that price is going to push bearish on Aussie dollar USD. Because if you look at this time, 8:55, we have that initial USD strength. Here we have price failing to break above. So that's USD strength kicking in. And then the development of a candle is wick first, body next, continuation, right? I don't want to jump in front of a moving train. I want to join this movement, which is bearish. All at the same time, if you look to the left here, what is USD CAD doing? Well, it's continuing to push bullish. So in that instance, I'm going to take this trade with the idea that we're going to continue down. Now, of course, this is not going to work 100% of the time, guys. No strategy out there is going to give you a 100% win rate. But what we're doing here is we're making the trade idea more favorable for ourselves because we're identifying the behavior of the market using that as a confluence, as well as using structure, whether it's break and retest, breakout, patterns, whatever it may be. And when we add those confluences, all we're simply doing is added confidence to the idea of the trade. Now, if this doesn't work out, then I lose the trade, we move on and we do it again. But if we move over to Euro Yen, let's take a look at this. This is a positive correlating pair. So this is a negative correlating pair. When USD CAD goes up, technically Aussie dollar should go down. When pound yen goes up, technically we should see Euro Yen going up. Now, what do we see? Again, we're on an hourly time frame. Let's take a look at the structure of the market. We can see that the structure of the market is bullish. We can see the structure of the market is bullish. We can see similar patterns in terms of behavior. Price is leaving strong wick rejections, meaning that there is a strong sign that the bears are not in control, meaning yen is weakening. And in this instance, pound and euro is strengthening. So with that in the back of my mind, I'm going to do the exact same thing. I'm going to wait for the market to show me that short-term behavior, which it has. I'm then going to look for the development of these hourly candles pushing bullish. I'll scale to the 5-minute time frame over here, and I'll scale to the 5-minute time frame over here. And now I'll look for the confluences. So let's say I'm looking to trade this on the new hourly open. Here you can see price is creating a level in the market where it's failing to break. We have multiple wick rejections showing signs of yen weakness. Looking over here to the right, you can see price again is showing signs of failing to break below. We have multiple wick rejections from this area. So this is showing signs of a bearish depletion. The bulls are stepping into the market. We can see at 9:05, we have a very strong bullish close. We can see at 9 o'clock till 9:05, we have a bullish close. We have 9:05 to 9:10, a bullish close. What do we have here? Well, at 9 o'clock, we have a strong bullish close. We have behavior that is lining up, illustrating to us that the yen is weak, and there's a very high chance that the euro and the pound will continue bullish. Whatever pair I'm trading, we're seeing a correlation in behavioral strength. That being said, however you choose to take the trade, let's say you trade euro pound, let's say this is moving at 9:05. This is slightly after we've seen the strong movement here on yen. What we can do is we can jump into the trade. Let's say I trade pound JPY, however you trade it, and take the trade. Now I'm taking this trade with full confidence. Again, all the confluences line up. The behavior has lined up. Price is failing to break the structural lows, failing to break the structural lows. We can see the overall sentiment on the hourly time frame is bullish. We can see the sentiment on the hourly time frame, price is bullish. We're seeing the same behavior, that price is failing to break the structural lows here with a bearish depletion. And then on the 5-minute time frame, when we come down here, we can start to see at 9 o'clock, 9:05, 9 o'clock, that price is pushing bullish. And in an instance like this, we can take the trade with full confidence that the market is going to continue higher. Now, guys, this is a very, very powerful way to use scaling down techniques and take advantage of short-term movements on the lower time frames, which I classify as trends. And I do this specifically because I'm an intraday trader. Now, this can be done on any time frame of your choice, because at the end of the day, everyone is trading the same daily candle on the same day. So the candle is going to push bullish, is going to push bearish, or it's just going to bop up and down, whatever it may do. But the theory applies across the board. If you become very good at doing this, guys, it is going to be so incredibly powerful for you to take advantage of these moves. If we look here, right, at 805, we can see that price is pushing bullish. Look to the right, price is pushing bearish. You can take advantage of this movement because this is indicating to us USD strength. Whatever pair you trade, let's just say this one, for instance, because it looks fantastic, we can take advantage of the short-term move to the upside because we've had the behavioral shift at the same time, illustrating to us that there's a very high chance this will go down. And if this goes down, then this goes up. If we go over to Euro USD and we start to see signs that price, let's say, because this is a positive correlating pair, is starting to push bearish, look here to the left. We have also a bearish candle close illustrating short-term yen strength. So what can we do in an instance like this? Well, we can take the trade. Now, of course, you're going to have to use scaling down techniques in an instance like this to take this, but the correlation lines up, the behavior is there. And the more you have that currency strength and weakness correlation combined with your strategy, so it could be reversal trading, where you're seeing price failing to break these structural lows. Here we have price failing to break these structural lows. What are we seeing here? Well, from this level, we're seeing prices failing to break. There's multiple wick rejections at the exact same time. And if we don't break and go down, technically we should go up. And if we start to see this pushing bullish at the same time that this is pushing bullish, then there's an opportunity again for us to take the trade. That's a confluence, price is failing to break. If you want to trade as a break and retest trader, then you can say to yourself, well, I want to see price come back to this level. And again, I want to see price come back to this level for a break and retest. And look here again at 740, you can see that price is rejecting this area. Price is rejecting this area. We have a bearish candle close. We have a bearish candle close. Now we're stuck within a range. You can take advantage of this move to the downside and say to yourself, well, there's signs showing yen strength and there's a positive correlation. And you can just do this all day long. Now, I don't encourage you to trade all day long, but what I do encourage you to do is just take notice that there are positive and negative correlations when it comes to currency strength and weakness in the market. And used correctly, you can have an advantage. Remember, your edge is always going to be your risk to reward and your risk management. But in order to see the confluences that you need, if you add this as an additional confluence to your trading, whether it be support and resistance trading, break and retest trading, trend trading, reversal trading, you are going to have an advantage. So I really hope I broke this down for you easily enough for you to understand. I'm sure we'll come with more videos about this, but go and give it a go. Go and look at the markets, any time frame of your choice, and see how incredibly powerful this is. I really do hope you enjoyed this video, guys. And if you did, make sure you hit that like button, subscribe, turn on notifications. And until next time, as I always say, continue to trust the process.